Dinar Shift is on the air, and today we're bringing you a currency intelligence report that may be the most crucial briefing you have received in recent history. For those who are monitoring the Iraqi Dinar, the Vietnamese Dong, or simply following the seismic shifts within the global currency landscape, now is the time to focus. A convergence of new information, including critical market indicators, unusual banking operations, and a clear increase in currency-related activities across several jurisdictions, suggests a major preparatory phase is underway. This is more than mere speculation, it is a developing market reality. Financial commentators are describing this period as a definitive market shift, while professional analysts are labeling it a pre-positioning window. The essential question on the minds of every holder is simple: what disciplined steps should be taken now? Today's comprehensive breakdown will peel back the curtain on the subtle yet significant movement happening behind the scenes. We will examine the increasing conversation surrounding foreign exchange activity, analyze how the controlled markets for both the dinar and the dong are demonstrating behavioral changes, and underscore why the element of time has become so critical. Furthermore, we will outline the preparatory measures you should be considering before the next opportunity window opens. We encourage you to set aside all distractions, remain with us for the entire segment, and treat this report as essential intelligence. The actions you elect to take in this moment carry more weight than ever before, potentially shaping your future financial preparedness. For experienced observers of the Iraqi dinar market, the current climate undoubtedly feels different. The intensity of discussion among currency holders, individuals within financial institutions, and private analysis groups has escalated to levels not witnessed over the last year. Reports are circulating about a range of unusual incidents, including foreign currency orders being halted, unexpected demands for greater identity verification, temporary branch closures attributed to system updates, and the sudden cessation of sales for certain currencies that were previously readily available. These are not isolated random occurrences. In a controlled currency environment, such deviations often precede major policy decisions or adjustments to the official rate structure. The dinar remains a currency managed directly by Iraq's central authorities, and when a controlled asset exhibits these kinds of abnormal patterns, it frequently signals a planned, systematic change being implemented deep within the financial architecture. Throughout the United States, foreign exchange desks at various banks are reportedly entering a quiet zone, where staff are strictly instructed to offer no comment whatsoever regarding the dinar, a silence that only serves to amplify public and investor curiosity. Whether this developing shift ultimately results in a measurable change to the exchange rate, a new high-level policy announcement, or simply another central bank step toward economic stabilization, the indisputable fact is that the market's behavior is radically unlike what it was 6 months ago. Those who maintain a disciplined watch are actively anticipating a larger structural development. Attention is increasingly turning toward the Vietnamese Dong, a currency that has steadily gained global recognition due to Vietnam's extraordinary economic trajectory. Propelled by rapid economic fluctuations, a massive surge in exports, and beneficial regional trade pacts, Vietnam has established itself as one of the most vigorously growing economies in all of Southeast Asia. Supported by continuous structural reforms and a decisive move toward digital financial modernization, many financial analysts suggest the dong is primarily positioned for a process of gradual, long-term strengthening rather than an abrupt, dramatic revaluation event. However, this slower, incremental approach to appreciation can still generate substantial benefits for long-term holders as exchange channels normalize and global market conditions achieve greater stability. A common query from our viewers is whether the dong could undergo a dramatic rate adjustment similar to the persistent speculation surrounding the Iraqi dinar. While no official confirmation or definitive statement has been released, the visible evidence suggests a consistent and notable tightening of regulatory control over the dong's trade at the institutional level. Banks are imposing greater restrictions on the bulk purchase of the currency, and buyers attempting to place large volume orders are being subjected to increased scrutiny. This type of regulatory constriction is typically instituted when central authorities seek to stabilize and control the movement of a currency in anticipation of forthcoming structural or financial adjustments. For individuals holding the dong, the current climate demands vigilance and a constant assessment of Vietnam's powerful regional economic performance indicators. Across various locations within the United States, currency holders of both the Iraqi dinar and Vietnamese dong continue to report a string of synchronized, unusual occurrences that strongly indicate behind-the-scenes preparation within specific financial institutions. One clear pattern has been the temporary closure of foreign currency exchange desks, often without any official explanation or timeline for reopening. In other instances, new and stringent identification requirements are being enforced, even for small currency exchange transactions that historically required no such formal verification. Furthermore, individuals have been informed in multiple banking regions that particular foreign currencies are temporarily unavailable, despite those same branches having sold them routinely in the past. It is vital to understand that this operational restructuring, while widespread, does not inherently validate speculation about a massive global revaluation event. What it does confirm is that significant changes are actively being implemented at the operational day-to-day level of banking and currency handling. Anytime financial institutions alter their internal policies without a corresponding public announcement, The change is almost invariably linked to high-level compliance updates, internal system modernizations, or direct regulatory instructions issued by federal or international oversight bodies. For foreign currency holders, these visible signals serve as essential reminders that major changes can indeed occur quietly and rapidly. Maintaining a state of advanced preparedness is therefore seen as a fundamental advantage. When the conversation inevitably turns to readiness, every informed observer wants to understand the tangible requirements for a major exchange opportunity. Though no official, public blueprint for a large-scale exchange has ever been formalized, the long-established principles of disciplined currency management emphasize meticulous document organization. Having current and valid identification documents, such as a passport, driver's license, or government-issued ID, ready and easily accessible is a crucial non-negotiable step that prevents last-minute scrambling. Equally important is the ability to reliably prove the origin of your currency through original purchase receipts or detailed transaction confirmations, which establishes the credibility of your holdings during a formal process. Organizing your currency notes by specific denomination can also significantly contribute to a smoother verification process, particularly for those holding substantial amounts. Many individuals overlook these seemingly minor administrative steps, but when an exchange window operates with speed and strict protocols, even a slight delay caused by disorganized documentation could result in missing a critical priority appointment. Beyond the physical documents, it is also considered prudent to have a simple, predetermined personal strategy, knowing whether you intend to preserve capital, reinvest, or allocate funds toward major long-term objectives can prevent emotional or rushed decisions once a time-sensitive opportunity presents itself. Preparation at its core is not about anticipating a sudden overnight shift. It is about responsibly positioning yourself to act effectively and decisively when conditions align. Let us now delve into the observable patterns of market shift behaviors, as grasping these trends is what permits proactive holders to anticipate regulatory and structural movements. Economic analysts are currently monitoring a wide array of factors, including Iraq's cyclical budget planning, global oil output agreements, the function of currency auctions, and the forging of new international financial partnerships. Each of these elements exerts a considerable influence on the dinar's long-term stability and eventual strengthening. Iraq's demonstrable commitment to increased digital processing, greater financial transparency, and deeper integration into the global marketplace suggests a deliberate trajectory toward a more resilient and modern financial environment. In parallel, the broader global financial landscape, including the movements of the US dollar index, the valuation of global gold reserves, and widespread inflationary pressures, simultaneously impacts all emerging market currencies. When these major global economic centers adjust, controlled currencies like the dinar and the dong can either gain or lose ground, depending entirely on the responsiveness and policy decisions of their respective governments. What makes the present moment so remarkable is the fact that multiple global financial segments appear to be adjusting rapidly and in near synchronicity. Both Iraq and Vietnam are visibly part of this larger, integrated global realignment, creating an environment where proactive, informed holders are intently watching for any measurable sign of a structural currency update or rate correction. Another factor that has contributed to the heightened sense of alertness among many individuals is the increasing volume of reports concerning exchange-related communications, messages about pre-appointment scheduling, or other private notifications. While the veracity of these anecdotal accounts, often stemming from individuals claiming links to former bankers, wealth managers, or previous currency exchange groups, cannot be independently verified, the sheer collective volume and geographical consistency of these reports are noteworthy. Whenever the level of community discussion regarding a sensitive financial topic rises dramatically and simultaneously across multiple different regions, professional investors tend to focus on the emerging trend rather than on individual, unconfirmed testimonies. Trend analysis remains one of the more reliable tools used in monitoring global currency environments, and at this moment, the collective pattern is undeniably signaling an acceleration of interest and activity. It is essential to emphasize that no individual should ever base their definitive actions solely on another person's unverified story or rumor. However, everyone should pay careful attention to collective, widespread patterns of behavior, which can often suggest underlying movement. These broad, concurrent conversations serve as a powerful signal that those who possess these currencies must maintain a state of awareness, exercise extreme caution, and be impeccably organized in the event that an official and unexpected exchange window were to open sooner than widely anticipated. The next move you choose to make truly matters, and here is a detailed explanation of why that is the case. If the market is indeed entering a pre-positioning phase, a window of internal operational changes before public announcements, then any form of administrative or logistical delay could prove costly. One of the most critical errors made by currency holders is the deeply ingrained assumption that there will always be ample time to react. If a new official rate or a specialized exchange opportunity is only available for a strictly limited duration, those who are not prepared or who hesitate are the ones most likely to forfeit their position in line or miss the moment entirely. Another significant and often underestimated risk is the tendency to wait until the absolute final hour to organize personal identification documents or to verify the authenticity of their currency holdings. Many long-term holders, surprisingly, misplace or entirely forget the precise location where their notes are stored, or they fail to secure and maintain original purchase receipts. Being prepared is not an act of panic, it is the epitome of readiness. Opportunities, especially in tightly managed currency transitions, tend to favor the most organized individuals. Those who approach this period with a serious, rational mindset and prioritize responsible action over emotional reaction are the ones who put themselves in the best possible position to benefit from the shifting landscape. Let's broaden our perspective to include global liquidity patterns and their impact on emerging markets. Financial experts have been meticulously tracking the significant, large-scale reallocation of institutional capital across numerous international markets. When there is a pronounced and coordinated increase in liquidity flowing into certain regional economies, coupled with a decrease in capital flowing out of others, it is frequently a precursor signal for forthcoming structural or rate adjustments. Multiple global investment funds hermetically moving assets away from highly unstable markets and redirecting them toward emerging economies that have strong ties to the energy sector, significant manufacturing output, and a clear path to rapid growth. Iraq aligns perfectly with this investment profile due to its expanding energy capacity, active infrastructure development projects, and a series of renewed partnerships with major international bodies. Similarly, Vietnam fits the criteria, evidenced by its massive manufacturing expansion, undeniable export strength, and commitment to rapid digital adoption. When these institutional big money entities begin to adjust their positions, it serves as a powerful, silent indicator for everyday currency holders to pay close attention. Institutions typically base their movement on future expectations rather than current conditions. If major funds are projecting stronger currency performance or significant regulatory reforms, their early actions may be the first non-public sign that a new, more favorable financial cycle is forming beneath the surface of the market. A further critical development to monitor is the growing, though largely unconfirmed, conversation around advanced digital verification systems within the financial sector. Some anecdotal reports from individuals suggest that new, biometric-style identification protocols are actively being trialed in various financial facilities, although the institutions involved have not made any official public statements. What remains a certainty is the global financial system's inexorable movement toward highly secure, technologically sophisticated transaction environments as a core component of overall modernization efforts. Whether this involves the deployment of advanced biometric scanners, new authentication software, or strictly secure appointment-based protocols, banks worldwide are transitioning to more tightly controlled environments for all high-value exchanges. Should Iraq or Vietnam proceed to enhance their national currency handling and verification processes, a necessary step for deeper global integration, these advanced digital systems would inevitably play a central and significant role. For existing currency holders, the essential message is one of future expectation: be prepared for a modernized, more formalized, and much more structured verification process whenever you next interact with a financial facility for a major exchange. Mentally preparing for this more rigorous and official procedure can significantly reduce stress and confusion if and when major updates or full process rollouts are officially announced. This emerging era demands clarity, meticulous organization, and a patient, confident approach. Many of our viewers often ask whether a significant currency event could genuinely take place without immediate and widespread reporting from mainstream news sources. The simple and factual answer is unequivocally yes. Major financial and monetary movements frequently begin quietly, especially when they involve controlled or developing market currencies. Central banks, treasuries, and major financial institutions typically only issue comprehensive public statements once all internal processes, regulatory frameworks, and operational systems are completely aligned and prepared for implementation. This means that the initial impact of major updates may be felt acutely at the operational banking level long before they ever appear as headlines in national media outlets. This procedural pattern should not be misconstrued as an act of deliberate secrecy. It is simply a reflection of the way stable, complex financial systems must operate with inherent caution, rigorous step-by-step verification, and deliberate, phased implementation. If the Central Bank of Iraq, for example, makes a major adjustment to its existing monetary policy, the resulting changes would naturally and gradually influence domestic and international market behavior well in advance of any subsequent official public announcement. The same principle applies to those monitoring the Vietnamese Dong. Nothing of this magnitude happens instantaneously, but every single structural change leaves measurable and discernible traces. These traces, including policy adjustments, changes in bank behavior, the deployment of new digital technology, and shifts in global capital liquidity, are precisely what astute observers are monitoring. Let us now focus on why your personal preparedness, your next calculated move, is so crucially important in this current shifting market. If global and national financial conditions continue to evolve at the present, quickening pace, the individuals who dedicate themselves to studying patterns, maintaining organization, and reacting thoughtfully will be the ones who stand to benefit most significantly. This is not an instruction to chase every unverified rumor or to rush into blind, emotionally charged action. It is a direct appeal to recognize the importance of timing, understand the true meaning of responsible preparation, and strategically avoid the costly mistakes made by others who succumb to panic or choose to ignore visible warnings. A salient example of a common mistake is when holders attempt to transact large sums of currency at standard retail banks where the clerks are often entirely unfamiliar with the notes, sometimes leading to unnecessary questioning or administrative delays. These types of counterproductive situations typically occur when individuals act impulsively rather than strategically. The demonstrably superior approach is to maintain a state of patient, informed, and organized readiness. Currency transitions, regardless of whether they unfold quickly or are phased in gradually over time, consistently reward the individuals who remain disciplined in their approach. Your current mindset, organization, and preparedness today are the foundational elements that will ultimately determine your outcome when market conditions definitively shift into the next operational phase. We return to the fundamental concept of how macroeconomic stability directly influences currency performance. The economy of Iraq has been consistently undergoing profound structural changes, all of which are strategically aimed toward greater long-term stabilization and full international integration. These initiatives include implementing new, stricter budgetary measures, securing major international oil contracts, and enforcing updated digital compliance protocols. Concurrently, Vietnam is receiving increasing global recognition for its pivotal role in advanced Asian manufacturing and its commitment to technology-driven growth. When sovereign nations successfully strengthen their underlying economic foundations, their respective currencies almost always experience a gradual, positive improvement in their perceived value. Even if a formal official rate adjustment is still a distant event, global markets respond proactively to indicators of confidence, stability, and enduring international partnerships. For currency holders closely watching these powerful developments, the most practical question becomes, how long will it take for these significant, fundamental improvements to translate into tangible, meaningful currency movement? While no one can responsibly offer a precise prediction on timing, closely monitoring the official, documented steps being taken right now by both governments helps in the formation of realistic and disciplined expectations. Both Iraq and Vietnam appear to be deliberately aligning their national policies with the broader global modernization movement, which is the core reason why so many informed individuals across various jurisdictions are choosing to keep both currencies as part of a long-term, structurally focused strategy. Reports of ongoing foreign currency restrictions at various banks continue to surface, and while these institutional moves do not constitute a guarantee of a major event, they certainly compel increased vigilance. Some financial institutions have completely paused the sale of foreign currencies, while others have implemented brand new, intricate verification rules. A number of banks have also quietly revised their internal compliance guidelines without offering any detailed public explanation. Historically, banks only undergo such rigorous procedural adjustments when high-level regulatory authorities update risk classifications, impose new audit requirements, or introduce stricter anti-fraud guidelines. These operational shifts may very well be viewed as early indicators of a wider, coordinated transition into a more tightly controlled, secure, and regulated foreign exchange environment. Currency holders must focus their attention not on the unsubstantiated rumors surrounding the changes, but on the undeniable pattern of the change itself. When multiple, geographically dispersed banks begin making similar procedural moves in a coordinated fashion, it strongly implies that synchronized policy adjustments are being implemented at a much higher level. Maintaining a constant state of awareness regarding these systemic developments is the key to remaining fully prepared for whatever comes next, whether it is a massive opportunity, a clarification of policy, or simply a new, more formalized exchange environment. We must also emphasize the critical importance of disciplined risk management, a factor that is often dangerously overlooked by many investors. Should a major exchange window unexpectedly open, holders run the very real risk of making costly, irreversible mistakes by acting too quickly, or more critically, by trusting unverified, speculative information. Fraudulent activity, especially scams, typically increases dramatically during periods of heightened market excitement, often manifesting as fake appointments, sophisticated deceptive emails, and promises of unrealistic, impossible returns. Protecting your holdings requires calm, rational judgment, maintaining a healthy skepticism toward any unsolicited contact, and an unwavering commitment to safe, official banking practices. Never, under any circumstances, should you share sensitive personal information with an unverified source. Never agree to send money upfront to secure an alleged exchange, and never allow anyone to convince you that the perceived urgency of the moment justifies abandoning all caution. Legitimate financial opportunities never require dangerous or reckless shortcuts. Remaining grounded, rational, and supremely organized is the most effective and strongest form of personal protection available. As the excitement around these markets intensifies, so too does the risk of scams, making your heightened personal awareness and commitment to caution your absolute best defense. Many in the currency community wonder about the optimal long-term holding strategy if a significant announcement does not materialize immediately. The responsible answer is that the holding period must be determined entirely by individual personal financial goals and risk tolerance. Some individuals treat the Dinar and Dong as purely speculative long-term assets, while others integrate them as a small component of a much broader, diversified strategy. Others still hold only modest amounts, viewing them as simply a potential unexpected bonus should conditions shift favorably. What matters above all else is that your decision is based on a clear analysis of your personal financial situation and goals, not on external pressure or speculative hype. If you choose to maintain a long-term holding position, the responsible approach is to continuously monitor the factual market developments, remain rigorously informed, and meticulously preserve all organized documentation. Conversely, if you choose to reduce or liquidate your holdings, it must be done responsibly through verified, official banking channels with proper documentation and verification. The fundamental key to a successful approach is making every single choice based on clarity and logic, never on fleeting or high-pressure emotion. Finally, let us consider the macro trends shaping the future of global currencies. International exchange rates are increasingly being influenced by the relentless global digital transformation, high-level discussions around gold-backed and asset-based currencies, and broad international banking reforms. Nations worldwide are adopting blockchain-based verification technologies, undertaking massive upgrades of their core banking software, and systematically adjusting compliance frameworks to combat financial fraud on a global scale. These overarching changes create an unavoidable environment of deep transition, one where all smaller economies, including both Iraq and Vietnam, must adapt quickly to remain relevant and competitive on the global stage. As this wave of modernization continues to spread, the stability and perceived value of participating currencies are almost certain to improve. Informed investors who are diligently tracking these multi-faceted trends fully understand that major global economic resets or realignments do not occur as a single sudden event. They materialize in observable, distinct phases. Each phase leaves clear, measurable signs: changing regulations, significant liquidity movements, new verification requirements, and shifts in routine banking patterns. At this specific moment, many of these crucial signs are appearing simultaneously and with increasing clarity, making this a truly pivotal time for anyone holding emerging market currencies. One of the most essential concepts for every currency holder to internalize is the absolute requirement for emotional discipline. The common human tendency is to panic when the market appears stagnant and then to rush headlong when a wave of excitement builds. Successful, disciplined investors operate in direct contrast to this emotional cycle. They prepare quietly, they analyze market data consistently, and they resolutely avoid making any financial decisions based on fear or excitement. If an exchange opportunity opens rapidly, emotional reactions can lead directly to mistakes: forgetting critical documents, rushing into unverified or suspicious appointments, or mismanaging the funds immediately after an exchange. The optimal strategy is one of calm, organized, and informed readiness. Being emotionally prepared is just as critical as being financially prepared. We bring our extensive report back to the central and unifying theme: your next move truly matters. The Iraqi dinar market is undeniably shifting. The institutional behaviors of major banks are changing. The fundamental structure of the global financial system is undergoing a comprehensive realignment. Both Iraq and Vietnam are engaged in strategic, long-term movements that strongly suggest a definitive path toward economic strengthening. Regardless of whether a major change is announced tomorrow, next month, or even next year, the level of preparation you achieve today will determine whether you are perfectly positioned to act and benefit when that definitive moment finally arrives. Possessing the currency is only the first step. Possessing organized readiness is the necessary second. The current environment demands heightened awareness, meticulous organization, and wise, rational decision-making. As we conclude today's extended, comprehensive report, always remember this one critical principle: major financial transitions very rarely pre-announce themselves. They appear first through undeniable patterns, subtle shifts in institutional behavior, and quiet, systematic adjustments, long before any official, formal statement is ever issued. And right now, those systemic patterns are speaking louder than they have in recent memory. If you have been a holder for this long, your immediate task is to stay informed, stay organized, and remain financially smart. The dinar market is in motion, the dong market is steadily strengthening, and your next responsible, calculated move matters more today than at any moment in the past few years. Stay vigilant, stay prepared, and stay tuned to Dinar Shift for the continuous updates that matter most.